Stand by for the latest episode of the Biz News Flash Briefing. The latest news from the world of business and investments.
Steinhoff will be settling as much as 1.4 billion rand in legal claims after insurers agreed to pay out on director liability policies. The announcement sent Steinhoff's shares up on the Johannesburg and Frankfurt stock exchanges. The move takes the scandal-hit retailer a step closer to a proposed $1 billion global lawsuit settlement, which was announced in July to settle about 90 separate legal claims in the Netherlands, Germany and South Africa. As part of the agreement, including with former chair Christo Wiese, the insurers will offer an amount of up to 55.5 million euros to market purchase claimants in exchange for certain waivers and releases. Steinhoff says it still maintains the right to take legal action against former CEO Marcus Jooste, former CFO Ben Lagrange, former secretary Stefan Grobler and the group's ex-Steinhoff Europe director Sigmar Schmidt for their alleged involvement in balance sheet fraud. Old Mutual has returned to paying dividends even though it reported an annual loss. It suspended its dividend in the first half as the pandemic dealt it a 6 billion rand blow. Old Mutual sales fell and credit losses rose. Old Mutual also had to hike its business interruption and rescue reserves to about 790 million rand in the second half. This rise was more than double its guidance in the first half. Northam Platinum says it will buy back all preference shares from its black economic empowerment vehicle Zambezi Platinum 4 years ahead of its 10-year maturation date. The nearly 2 billion rand transaction will offer a 16% premium for the Zambezi preference share and will also include an overall 25% share buyback by Northam, the company said. Northam has been buying back Zambezi's preference shares from institutional shareholders to reduce its own preference share dividend expense and liability and potential financial exposure under the guarantee it gave to shareholders. China faces the threat of foreign outflows from the second half of the year as rising borrowing costs in the US drive investors out of emerging markets. This is according to a former advisor to China's central bank. The US stimulus is boosting the outlook for growth and inflation, driving up bond yields and prompting investors to sell riskier emerging market assets. That, says Bloomberg, is a worry for global policymakers as they brace for more volatility in their currencies and financial markets.
You've been listening to the Biz News Flash Briefing, bringing you the latest news from the world of business and investments. Subscribe to Biz News Radio on iTunes, Spotify, Amazon, or by visiting biznews.com.